Hi, and welcome to your Daily 5. My name is Joe Rabil. I'm with Rabil Stock Research. I've been providing research and consulting to institutional money managers for the past 30 years. So the market continues to be under pressure, and I thought it was worthwhile to spend some time on the key indices as we try and decipher where things are headed from here. So let's go ahead and get into our Daily 5. And I'm going to start with the 10-year Treasury Yield. And, one of the things from picking up a lot of little tidbits from clients over the years, one of the phrases that I've heard more than once is that the market's been a TINA market, using the acronym TINA. There is no alternative. So in other words, the stocks have really benefited from the fact that there really isn't another place to put your money. When we start to look at the yields, this is where, this could actually start to potentially shift. Although I don't think 3% is enough to really draw a significant amount of money away from stocks. I would tell you that the trend of this 10-year yield scares me a little bit in terms of what it's doing. The momentum characteristics are very strong. And I've got my four charts up here. The monthly here in the bottom left is the one I want to focus in on for a second. So we have this potential shift taking place. And, we had a sort of a drop there in 2020 that immediately made a bottom and reversed back up and got back up through these lows here from the last 4, 5, 6 years. And what I think is key here is actually what's taking place right in this leg right here. I mean, I thought this was important that we shifted the 18-month back to the upside and held it and started to turn back up. But this leg to the upside is really powerful. And the fact is that if we go and look at what ADX is telling us, and especially the DI lines, look at this green DI. And notice how strong this line has gotten. It's up at almost 40 now. And we can go back and look and go all the way back to 2001 on this chart. Green DI has never been this high. We've never seen the buyers this strong going back to 2001. And so I do think that is a pretty important key. And what it tells me is we had a climax move to the downside, because look at this huge reading in the ADX. It got over 50, and that was based on the selling because red DI was on top. And what is taking place here was essentially a climax low, and now it's being followed by a very powerful sign of buyers stepping in. And so if we have a climax low and then a real strength in the buy side, I'm under the impression that, this is a key level up here. We can see 3, right around the 3 area is a pretty key, important level to watch. And I would assume that we're going to go hit that number, maybe exceed it a little bit. And then I think we go through a pause phase because we're getting a little too far away from the 18-month line. However, based on the strength of this move, based on the reading we got in DI, and then if we go and look at the reading that we're seeing in the ADX on the weekly chart, which is up around 40 and rising, I'm under the assumption that, we're getting a little overdone in the short term, but there's more upside coming down the road after a pause, after a pullback, after a consolidation. And so as this starts to creep higher and work its way higher, I don't actually know what the number is, where this TINA market starts to shift and money starts to exit the stocks. But I would tell you that if we continue the trend to the upside, it's going to have a deteriorating effect on the general market. So something we have to keep watching, but my bias in rates is that they're going higher. Let's go ahead and look at the NDX and Nasdaq 100. And the reason why this is so important is because in the S&P 500, 8 of the top 10 stocks in terms of market cap are in this index, this Nasdaq 100 index. So we want to keep an eye on this because I think it's telling us a lot about what's taking place, generally speaking. And if this index starts to fall or really lose strength, breakdown, I think it's going to have a material impact on the entire market. One of the things I want to do here is focus in on this 18-month line. We can see the slope of this line has started to lose a little bit. We put a little bit of pressure on it. Notice how we closed back above the last 2 months, but now we're back below it again. And the question is we have about a week or two left in this month. Are we going to get back above and be able to close above? So this is something we have to watch, and because if we close below this, and you have to sort of assume this 18-month line is actually going to lose more slope and even potentially flatten out. But the other thing I want to talk about is the ADX. Notice on the weekly chart, the ADX is showing some strength, but it's based on the sellers. And that's the first time that's taken place in quite some time, for a couple years. We're also below the 18-week line, and that 18-week line is below the 40. So we've truly shifted this weekly trend. I'm still of the opinion that we're going to spend some time channeling here. I don't think we're going to go straight down and break 13,000 right now, just because we had a pretty big sentiment reading on more bears than bulls at the low. And it just leads me to believe that we should consolidate some. But while we're consolidating, and if we stay below 15,000, that's another big negative. One of the things I think we need to watch is the slope of this 18-month line. If that line starts to roll over, flatten out, then I think this index is going to have a very difficult time, and it puts itself in jeopardy to turn the trend to the downside. Let's look at this IWF, which is somewhat similar because a lot of the big names are in this IWF. They're on the growth side of the equation. And we have the same issue taking place on the monthly chart. We have the same issue on an ADX basis on the weekly chart. These patterns look very, very similar. But what I want to focus in on is this weekly. Notice what's taken place here. We had a decline in relative performance during this phase here. But look at what the price pattern did. The price pattern made higher highs and higher lows through that phase. And I don't know if any of you watched, but last year I did a daily 5 where I included the IWF and the IWD, and I was showing the difference between growth and value. And what I said was, where I'm going to be concerned about the market is if we see not only relative underperformance in growth, but we also do see deterioration in the price pattern. And if we go and look at what's taken place, we've made a lower high, and then we made a lower low coming back down through that bottom. And then we made another lower high, and now another lower low. And we also took out this prior bottom. But on the rally back up, we have exceeded this prior bottom, and that sort of goes into what I've been talking about, which is more of a sideways pattern in the near term. What concerns me, though, is what I said at the beginning here, is we have deterioration on a relative basis, and we also have confirmation on a price deterioration. And I think that sets the stage for something potentially worse to take place here, something we have to watch. And in this index as well, we have to watch the slope of this 18-month line. If that starts to roll over, then I think we have to be very, very concerned, because if growth goes down, I think it's going to put pressure on the entire market. I think the whole market's going to have a hard time if that takes place. Look at the difference between growth and value, though. We have a value chart, and we can look at this again. Notice the difference on a relative basis, how value is really doing well. We're seeing the utilities do well right now, obviously energy, even basic materials with the metals and everything. All those play into this value index, and they're showing nice improvement on a relative basis. But more important, again, we're holding and moving sideways. We're not necessarily going up right now, but we're holding up a lot better than the growth side of the equation. Now, what I'll tell you is, and what I'm watching is this 155 area, because if the growth area comes down and breaks down, if it goes down and makes another new low, then I think it's going to put pressure on the whole market, and we're going to need to see this 155 area hold on the value side. And if it doesn't, then I think we get some kind of a much more dramatic drop in the general market, and it'll be very hard to hide at that point. Finally, I want to take a look at the gold index, and one of the things I want to focus in on is look at this monthly chart. We had this big move to the upside and we've cupped around, but look at how the ADX held 25 during that whole corrective pattern on this monthly chart. It went down, the 18-month even flattened out through here, but ADX stayed above. That tells me, number one, that the sellers are very, very weak in this index, but also that the buyers stayed pretty strong throughout this corrective pattern. Now, look at the weekly. Look at what's going on the weekly basis. Look at how green DI, which is a strength of the buyers, is breaking out again after going in, taking a pause there for a year or two. Now we're starting to kick in again, and the ADX is starting to kick in. Look at the volume confirmation and a really nice pattern that has developed on this chart. So this is a pretty good area. I think as we get minor pullbacks and look at the individual stocks inside of gold, there's lots of improvement taking place here. Certainly an area that I would be looking at going forward here. So that is your daily 5 for today. I hope you enjoyed this segment. You can contact me through LinkedIn or find my research on rabilstockresearch.com. In addition, if you'd like to learn more about trend, MACD, and ADX in multiple timeframes, I have a YouTube channel and a book called Invest Like a Pro, which delves into this subject. Have a great trading day, and I'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.